those trade concerns, currency concerns, concerns about the Chinese economy. Maybe that's all the same thing. But the stock market, they're getting crushed today. Baidu, Alibaba, Tencent, Sina, all down at least 3% as the Shanghai Composite hits a multi-year low. We're here with Craig Johnson with Piper Jaffray. Stacey Gilbert is with us from Susquehanna as well to talk about, try to handicap where these markets might go. Craig, how does that Shanghai market look to you right now? Maybe some of the bellwethers as well.
Yeah, thanks, Mike. When we look at the Shanghai Composite, the first thing I would point out is there's been a very long-term uptrend that's been intact since 1996. And the recent price action on the Shanghai Composite is now violating this. The Shanghai Composite is down over 35% on a year from its 52-week highs. We're breaking this longer-term uptrend. Mike, I'd point out that from a technical perspective, the next area of support that would come into play on the Shanghai Composite would be around 2,000. That's about 20% lower from here. So still significant downside left to go. And the question that I've been asking institutions as I've been in New York this week is, can the U.S. continue to do it on its own, or are we going to continue to see the Shanghai Composite come down? Will that ultimately affect U.S. equities? From my perspective, I think the answer is ultimately yes, it will.
Ultimately, yes, the U.S. market will have to come down more?
That is correct. Yeah. Ultimately, yes.
And just, Stacey, you know, one of the at least perceived paradoxes of this whole thing is we've been talking about trade fears and exports from China and tariffs, and yet it's those big FANG-like Chinese internet stocks that have really not outperformed. They've actually gotten hit harder than the rest. So are there any of those that you think you can make a fundamental case for here?
Yeah, absolutely, Mike. Baba would be the name that I would highlight. So our internet analyst, Shyam Patel, covers with a positive rating and a $220 price target. So a couple of things that we could highlight about Baba. So first of all, if we were to look at what it actually represents, I mean, just China has a huge and growing e-commerce, and we believe that this is going to be the winner. Baba will win. There's no doubt about that. Valuation-wise, the market has certainly overshot to the downside. If we were to look at the e-commerce business of Baba relative to eBay, it's trading below, which just rationally doesn't make sense. Now, to Craig's point, the markets can be irrational for much longer. We don't know that we've hit a bottom, but what I would say in terms of Baba, this is a name that we love long term. 2 years out, we expect it to be higher. So we think there are two ways you could play it. You could just buy the stock outright. It's almost your Ron Popeil, set it and forget it. Just buy the stock, don't look at it again. We may not be at the bottom, but we do think 2 years higher. 2 years later, we are higher. The alternative is buying calls. So while the volatility is certainly elevated relative to itself, it's not elevated relative to other ETFs that include Baba. So you could look at in-the-money calls within Baba, get that upside exposure while limiting your downside risk, particularly looking at what Craig's saying is where that potential downside should be in the Shanghai. We do think Baba longer term, this is a name to own.
And Craig, I know you do have a technical look at Alibaba as well. So what does that tell you?
Yeah, so if we look at the chart of Alibaba and a lot of the Tencent and the other names, these, again, just like the Shanghai Composite, look fairly weak. And this particular chart is a distributional-looking chart that's just starting to roll over. When I look at the big long-term uptrend break that's come into play, to me, it still seems like there's a lot more downside left to go before we get back to an identifiable support area. Similar to the Shanghai Composite, Mike, I would tell you, you could see this down 20% from here and just come back to an identifiable area of support. So it's too early, based upon the charts, to really step up and buy some of these names like Alibaba, in our opinion, based upon the charts.
All right. Looking pretty dicey. We'll see how it plays out. Thank you very much, Craig, and thanks to Stacey Gilbert as well.